Hi everybody, Brian from Bear Bull Traders here. It is the weekend, September 24th. Hope everyone's having a good weekend. This, of course, is the weekend swing trade video, and we'll take a look at what happened last week and then look ahead and see where we might be going next week. It's been a crazy couple of weeks, so let's get down to it. So starting out with the week in review, what happened last week? Well, of course, we had the Fed rate hike decision, which was 0.75%. That was pretty much as expected by most of the market players. I think it was the comments that Powell made after the announcement that really took people a little bit by surprise. He was clearly very hawkish and made it clear they were going to stay the course to beat down inflation no matter what the cost. And the markets were down and then they were up, and then Powell started speaking and then they really dropped. So I think that was a little bit of his hawkishness was a little bit of a surprise. Um, then we had Friday morning come along, and the UK came out with some announcements on tax cuts and some additional spending. It's not really what you want to see when you're fighting inflation. It's almost the opposite. It is the opposite. And of course, the markets did not like the sound of that, and they just literally crushed the pound currency, and of course that strengthened the US dollar as well. So you can see for the second week we were down sort of similar amounts here, 4.5%, and the IWM small cap index really took the beating here with a 6.5% drop on the week. Areas of strength and weakness, well, there wasn't really any strength, there was just less weakness, and that was the defensive stocks, consumer staples, utilities. And of course, the biggest losers were economic sensitive stocks such as the discretionary and energy. They were the biggest losers on the week. Of course, with the dollar going higher compared to other currencies, the Treasury note yields also increased. You got 3.69 up on the 10-year, and the 2-year screamed through 4%, and now it's at 4.2, still with that inverted yield curve. And of course, yeah, as I mentioned, the dollar was up big on, especially with the UK getting that announcement out. And as far as Bitcoin goes, well, it's just sort of hanging around this 19,000 level on the weekend, sort of up and down around it. And yeah, so that was another wild week here. So let's take a look at what we might be going, where we might be going next. So, and before we get going into some of the charts here, this, as always, is a quick ad for my book on Amazon. It is called Profiting as an Active Trader, and of course it is there now available in audio as well, so you can check that out. So let's start looking at some charts here. Starting out with the treasuries as always, because they seem to be driving the stock market and where it's going. But you can see here the 2-year, as I mentioned already earlier, we've broken through this 4.4% level on the 2-year. It's just keeps going higher here and getting pretty extended. Still in an uptrend, but could be due for a bit of a pullback next week. Again, still in an uptrend on the 10-year as well. We're well through the 3.5%. And heading towards 4 on the 10-year as well. All the momentum indicators are indicating strength, but maybe getting a little bit overbought, maybe due for a pullback, which will help the markets, of course, which need some help. You can see here is the transports. I mean, it took a beating here with the FedEx release of numbers and guidance, and it's just been heading lower ever since. And we did put in a bit of a doji candle on Friday on volume, so maybe a bit of a possible capitulation for next week. Again, on the weekly, we have lost the 200 weekly moving average here, so that's not a great sign. Stochastic still below the 50, which means, and momentum heading lower on RSI. So again, possibility for a bounce here, but again, trend is the downside here, and I think that's going to be a sort of a common theme. Again, you can see here the Dow well off the lows of the day, but still solidly in a downtrend. We did break this June low here on Friday, and yeah, definitely weakness. again, well off the lows of the day, and again below the 200-week moving average here on a bit of declining volume, and still not looking very good. Here's an area of potential support down here around 28,600, maybe 28,700, and again, we could be heading there. The Qs again, well off, same comments, well off the lows of the day on Friday. Stochastics indicating very oversold. Momentum indicators still going down. Could indicate that I still think we have more downside to this. Maybe testing this June 270 level. We almost got there on Friday before bouncing. Again, the weekly, we're coming down to that 200-day. The SPY, same comment. We pretty much tested this prior low in June and bounced back. So I think overall we're very oversold on a lot of these metrics, and possibility for a bit of a bounce here. You can see every time we get quite oversold, we get a bit of a bounce. I still think we may be heading lower as the economic overriding, high-level economic conditions are not looking great right now, and they're not looking like they're going to be improving. So again, possible play for a bounce, but I'm still pretty bearish on this market overall. So IWM again really took a beating on the week. We did almost come down and test this June low. I still think we're going there at least. And again, you can see here, we did kind of test it on Friday, came down, tested the close here, and bounced off it. So now on volume. So again, I think we're due for a little bit of a bounce, but I think the trend is still to the downside overall. The VIX, we really popped up. It sold off on the day. Now, usually Fridays, VIX usually sells off, but I would, again, expecting a bit of a pullback here, but the trend is still heading higher, and that's where I think we're going, but in the short term, maybe a bounce. Yeah, the dollar just ripped on Friday thanks to that UK announcement, and you can see here just getting really extended, and again needs a period of consolidation or a bit of a pullback here to sort of regain momentum, but the momentum still seems to be to the upside on the dollar, which is not great for emerging markets, materials, that kind of stuff. And here's Bitcoin. Bitcoin, we're still kind of hanging around this 19,000 level. Doesn't seem to want to break down, but it certainly doesn't seem to want to move higher either. So kind of stuck in a range right there now. Let's take a look at what we got on watch. Apple is one of the ones that's really just hung in there. It has not broken down like a lot of the other stocks have. You can see here it's kind of stuck in a bit of a range here, and I think a lot of people are watching Apple sort of as a bellwether. This 150 level is pretty critical right now, I think, for Apple. If you want to watch Apple just to see if it keeps holding this 150, I suspect it's going to, if the market bounces next week, watch for Apple to bounce. 155, 156 could be an area where it could get back to. Certainly there's some resistance right there. But if it loses this 150, I think the rest of the market, a lot of people are watching Apple to see if it holds here. If it loses that, then I think the rest of the market goes as well. This penny stock I was in, I did sell some of it, and then I had to stop out of the rest of it. So I'm just keeping an eye on it here. Unfortunately, it's just the direction the market's going right now. Volume's been pretty light on it. But again, it's hard to be long anything right now with just the market heading in the opposite direction. And I'm still watching this one. I still think this could be a really decent play if we do get some bottoming and in the markets overall. But again, longer term for that one, the Germany ETF. Here's another one I'm watching for a bounce. The banks have just been beaten up, and again they're testing this. This is a 3 times. This is a beta ETF. You can also play XLF. But this beta ETF will perform really well if we do get a bounce next week. And again, I'd only be playing it for a bounce. So FAS could be interesting. This is one I'm just hanging on to. This is Rogers Communications. Again, just it's been sold off substantially, and I think it's found a level where it's happy. And I think if there's still a takeover bid in the works, and it's probably going to happen next year with Shaw, and I suspect this is going to start to move back up. So I'm just sitting with some shares in this one right now, and as long as it stays above this prior low, I think I'm good. TZA, this is one that that I've been playing this week on these the market sell-offs. This is a bear ETF, so obviously it goes up when the markets go down. It's done really well. But I now think it may be due for a bit of a pullback. But if we do get a pullback, I'll be looking to re-enter it because I don't think we're finished going down. And UNG, another potential bounce play here. I think natural gas, the story behind natural gas is still a strong one, and it's really sold off with the strong dollar and energy just in general selling off on a weak economic outlook. But again, going into the winter with Europe, natural gas is going to be a big issue. So those are the stocks I am watching for next week. Again, watching for a bit of a bounce. Again, but in big scheme of things, grand scheme of things, I think we probably are going to head lower. So any bounce could be played, and then another opportunity to possibly get short. So we'll see how things look. So let's wrap things up here and put a bow on it. What are we watching next week? Here's where we are right now in the indexes, and where there are some areas of support and resistance. I won't go through them all. We kind of did that with the charts. Economic events coming up this week. We've got durable goods orders and the Schiller Home Price Index to look at next week on Tuesday. Thursday, China PMI. I got a feeling that's not going to be great with all the lockdowns still. And this is the Friday, the core PCE number. This is the Fed's preferred inflation indicator. So I'm sure people will be watching to see how that compares with last month's indicator and year over year, how things are looking, if there's any relief in sight from inflation. As far as earnings coming up this week, again, pretty light, but we're just about getting into earnings season. Some of the notable ones, BlackBerry, we've got a financial here, Jeffries. And then Thursday, Bed Bath & Beyond, your favorite meme stock, Nike and MU, consumer staple stock, or consumer discretionary stock, I should say, semiconductor. MU was pretty strong, interestingly, on Friday, even though the rest of the market was kind of weak. MU sort of held in there, so it'll be interesting to see what they say. And we've got CCL, the cruise line, coming up. So that's it, everybody. Hope have a great rest of the weekend. And as always, we will be starting out live on YouTube at 8 o'clock on Monday morning. Pre-market show, take you right into the open, and then, of course, trading the open with our members and moderators. So again, have a great weekend, and hopefully we will see you Monday. Bye for now.